Hey traders, welcome back. I'm Kenya with BK Trading Academy, where we help new and struggling traders learn how to trade with structure and guidance so that you guys start the right way, you have a breakthrough, and you know how to trade confidently. In today's course, we are going to talk about stop loss. So this is a free training that I'm going to break down where to place your stop loss when trading. I know a lot of traders get stop loss mixed up. They don't know where to place it. They don't know if it goes above a buy limit order or a stop limit order, or they're just all over the place. So if you're a new or struggling trader, then I hope to provide some relief for you. If you are new here, I want to encourage you to subscribe, turn on that notification bell so that you don't miss the next upload. Grab a notebook, grab a pencil or a pen, take some notes, pause the video where you need to, and let's start learning, you guys. You are going to love this, and I hope to help improve your risk management. Let's hop right in.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
So when you hear stop loss, it is simply a protective order that's linked to your trade that helps minimize your losses or protect you from damaging losses if the price were to go against you. So for example, if you wanted to place a buy in the market and suddenly the market starts to decline to the opposite direction or to the downside, and you're like, oh my gosh, what is going on right now? I am in significant drawdown, right? A stop loss would minimize the loss that you would incur. And the whole goal of it is to make sure that you are giving yourself some type of protective assurance that if anything goes wrong, you are trading according to your risk tolerance. You're willing to risk only what you can afford to lose, and you're trading responsibly using some type of stop loss strategy. So let's get into this. One of the things I definitely want to make clear is that a stop loss order is very different from a buy limit order or a take profit target or a sell limit order. A stop order simply just protects your account in case the worst were to happen, or in case your analysis is wrong and the trade goes against you. So let me just kind of break that down on a simple chart right now, and we're going to do that with Euro AUD. On the daily, I'm going to go slow, and I'm going to show what would be a buy limit. We have a great video that I'll link for you actually that breaks down buy limit, sell limit. I'll link that right above so that you can check it out. And then we're going to go through and I'm going to define how this is different from those type of orders and how you want to use a stop loss order when you are trading. All right, so let's say we are looking at Euro AUD. We want to swing trade this pair. And the first thing we're going to do is identify the trend. So on the daily, we have a bull market. When I say a bull market, we have an uptrend where price is making higher highs and higher lows. So we can see that here where previously we saw price in a downtrend, decline to the downside. We created a low. We had a high, we then formed a higher low. We then created a horizontal high and we moved sideways before breaking higher. Okay, so we created a few areas of support here and then we continued to rise. Now we have a new high, we have a low, we have a high, we have a low. So a low is taken out here. This could be an indication that, you know what, price might be getting ready to fall. But until that happens, we're just identifying the structure here, okay? So we have a bullish market where price is making higher highs and higher lows. So let's say, for example, we always want to buy at a higher low. So this would be your higher low. This would be your higher low. This would be your higher low, your higher low. So each time the price accelerates higher, we want to wait for it to come back to a higher low in order to buy. Accelerates higher, comes back to a higher low, and we look to buy. Accelerates higher, comes back to a higher low, and we look for an opportunity to buy. Now, preferably when we are buying, we want to make sure that this is a strong area of previous resistance / support. So one thing I do see here is that within this area, we had an area of support and also a cluster of resistance as well. So when I say a cluster, I'm talking about multiple times where that level was tested. So look at that resistance, and even slight below it, right in this same, it's a zone, okay, that the market is respecting. So this resistance became our future support. Look at the significant price movement to the upside. These are the type of levels you want to trade from, right? Okay, so now that we know that we have a bullish trend, we want to trade within this trend. So if we have our bullish trend here, and let's say, for example, we get long in the market, that means we place the buy. So I'm simply going to locate a significant area of support / resistance, and that would be this area right here. So one thing that you'll see is that the market was previous strong resistance right off of this area, and it became support in the future. And we now have multiple touches off of this trend line. So we have at least 3 touches off of this trend line, which gives us a valid trend. Okay. So I'm going to go ahead and I'm going to note that this is our support. And since we are buying in an uptrend, we want to put where we want to enter. So one of the things I like to use is a 50-period moving average. I like to use it for dynamic support and resistance. And I usually keep this hidden because I don't like indicators, but I do like to use the 50-period moving average for confluence, okay? So now you can see here that price rejected off of my trend line. So when I say rejected, you can see the shadow or wick here. So price rejected off of my trend line, but it was also previous resistance, okay? It stayed above the 50-period moving average, and notice that price is moving upward from my support zone. So my support zone is also an area of very strong previous resistance, and this is where the market fell, all right? So considering that, this is definitely an area that I would keep my eye on, and I would say if the market comes back to this section and provides me a trading opportunity, I will definitely look to buy. So let's say if we decided to buy here, so this is where we would buy. Now, if we buy right here, let's say we got best price at 1.6658, right? Where would we place our stop loss? Where does it make sense to place our stop loss? So one thing that you'll notice is if you look at the times where price became a higher low, so here, okay, and we'll just mark this one too, higher low, all right, and then let's see, where else do we have a higher low? I would say we sort of have something right here, right? Because look here, and then not too far, you have resistance here, but we definitely have it here. But one thing you'll see is that usually price will wick or create these shadows off the candle. So this is what I'm talking about. When I say a wick, I mean these shadows here. This is what kind of stands out. Okay, it's not the body of the candle, but the long tail. That's called a wick. So when you are placing your stop loss, you don't want to be too close to the tail or the wick because oftentimes you can get prematurely stopped out. So you want to give the trade enough room to breathe. And more than anything, you want to make sure that you're always trading according to your risk tolerance. So if we were going to get long right here, if we were going to buy at 1.6658, we want to see what our potential is. What can we possibly make? So we know we're in an uptrend, right? And we've already seen that prices come down and corrected, and we want to see that it continues this uptrend. Now, if I go to the weekly time frame, I can't see any price action to the left. If I go out to the monthly, you can see that price is trading from an extreme high. And when you have levels like this is a possibility where you might see trend reversals, but you can see very clearly that price is rejecting off of our monthly right here at 1.70, like 72. And the last time price was in this area was back in May of 2020. So that's our pandemic level right there. So maybe price might not get all the way there, but there's a potential that it could. And we also see this price action here. So we want to be mindful of that. So now that I go down to the daily, one thing that I do know is that I have gotten a pullback after a rise to the upside. So if I got a pullback, I'm simply just talking about this area right here where the price pulled back. And in order for us to buy in the market, this is exactly what we want. So what you want to do is look at your potential profit target first. And you always want to make sure that you are in a position to potentially make more than you would stand to lose. So if we measure from 1.6657 or 8 or so, and we say at least we know we can get back to about this resistance right here, okay? That would be 210 pips, and that would be a price target of 1.6867. Now, why did I choose this area for a profit target, right? Where I would take profit. That is because if you see here, this is where the price last reversed. This is the resistance area where the price reversed. So if the price moves up from this support, you want to always look left and see where is it possibly going to stop, pause, and turn around. And one thing I want you to see here is look how many times it has done that. Look how many times it dropped, price dropped, it came up, it paused, it dropped, it came up, it paused, it dropped, and it came up, and it paused again in the same area. So logically, if I am going to buy and price is starting to go up, I'm going to look left and notice the reversal zone where price maybe had a cluster of support and resistance. And I want to get out before it approaches that area because that's where opposing pressure could come in, such as buyers or sellers, okay? So now that we know we have a potential to make at least roughly 200 pips, where should we place our stop loss? So for a swing trader, for example, since we're off of the daily, this is going to suffice for a swing trader. So logically, when you're buying an uptrend, you want to see that price will respect the trend line, right? So as long as it respects the trend line, we're good. But let's say if it breaks the trend line, breaks our 50-pair moving average, how much are we willing to risk? And there's a few things you want to consider when you are placing your stop loss. There's no right or wrong answer to this. You definitely want to observe the market, observe the pair that you trade. You want to get comfortable with this movement. You also want to know, is this one where I need to use maybe a tighter stop, or is it best to use a wider stop because maybe the pair wicks quite a bit? Like with GBP pairs, you want to know that. You really won't become comfortable with your stop loss, to be honest, until you start tracking data on your trades. When you're in the trade, you need to study your observations and see what works for you, because what works for you may not work for someone else. If we have different balances, for example, there's a lot of times where I may call a trade for the academy, even though we have a very high win rate on our trade ideas. I know that there are people who can't use a wide stop loss like I do, or they can't trade like I do. Or when I was trading and I had a very significant smaller balance, I couldn't do the type of moves that another trader would do based on the type of tolerance and also account size that they had. So the more capital you have, the more options you're going to have. And it's not that you're being irresponsible with a larger account. It's still the same. You have to protect a larger account just like a smaller account. But the more money you have, the more options you have, okay? And you can be strategic with it, whereas someone with a very small account would be forced to possibly cut losses because they don't really have any room for error. So when you are placing your stop, you always want to give your trade enough room to breathe, and you always want to make sure that your profit potential outweighs your loss potential. So let's say, for example, if price were to break this trend line, I have to ask myself, where does it make sense to cut a loss? And one thing that I see here is that because this is an area where the price wicked, now one thing we could see is that we have a break and then price gives us a retest and then continues lower, right? But one thing I'm always thinking about is, where could we possibly wick? Where could price push a little bit lower? And I do see this area right here. So look left and look at this, look here, look here. And although we do have a nice swing there, we also have this area as well that I expect could possibly turn future support as well. When we're looking at this uptrend, seeing how our trend is perfectly bullish right now, and if we are going to see that this trend stays intact, then this support should hold. If this support breaks, this is an indication to us that price will possibly push lower. So it may come here and it may bounce from where this resistance is. This area would become support. The price moves up and then continues down. That is definitely a possibility. So in that case, you have to ask yourself, how much am I willing to lose? Do I want to use a tight stop? Or because of what I'm seeing, do I want to keep my stop loss minimal and maybe place it about, let's say, 60 pips down? Because if it breaks this trend line and crosses the 50-period moving average, I'll just cut my losses because that may be an indication that price is headed lower. So that would be an option. But you always want to place your stop loss enough room below structure. So remember, if you are buying in an uptrend, your stop loss goes under your entry. And I want you to pause right now and I want you to write that down. If you are buying in an uptrend, so price is going up, right? Price is going up. If you are buying in an uptrend, so the price is going up, your stop loss goes under your entry. So you're going to get in here, stop loss goes down here, price goes up, and you go in profit. But if the price comes down and hits your stop loss, you're going to get taken out of the market with minimal loss. That's what a stop order is, and that's how it protects your capital in case price goes against you. So where you place your stop loss is going to also depend on the style of trader that you are. So I just gave you an example as a swing trader. So if we're risking roughly 60 pips to make close to 200 pips, that is an excellent risk to reward ratio, okay? So you want to make sure that you're not risking 100 pips to make 40 pips. You don't want to do that. Unless you are perhaps trading a very significant level, you're lowering your lot size and you're spreading out your stop loss to give yourself some room or breakthrough, then that's where it could possibly make sense. But you always want to make sure that your profit target outweighs your risk. Someone in our academy asked this recently, and some people it might just click, but there are a lot of people I'm sure are thinking this same thing. So When you are placing a buy limit order or a sell limit order, buy limit just means you're going to buy in the market. And we have a perfect video on that. I will link it above for you so that you can go and check it out. And it is excellent. If you don't understand buy limits, all the market order types, go check out this video. You will love it. It's one of our top videos on YouTube. Okay, so your TP or take profit target is not the same as a buy market execution order, sell execution order, buy limit or sell limit. When you buy in the market, so looking here at this Euro AUD, if we buy here, our take profit target is going to be above that. So we're expecting for the market to rise. We want the market to go up, right? We want it to go up. So where we take profit, or we also call it TP, where we TP is going to be anywhere up here above price. So somewhere along here, we want to take profit, okay? Or maybe in the middle of that price action, or maybe we're hoping price even gets back to resistance up here, and we're going to take profit at that zone. So just remember, when you are buying, your take profit is not under the buy, because you're not looking to take profit down here. If we are looking to buy, that means we expect the market to go up, and then we want to take profit somewhere reasonably within along that directional path, okay? However, if the market was going to the opposite side, so let's say, for example, if the market was going down and we wanted to sell, let's go over here. Let's say if the market was going down, so notice here, the market started moving down. So after it had moved significantly upward, we created a high. So look here, a high. We created a low, we created a high, and then we created a new low. And look how this low is a retest of this previous low. So that was a strong area of support, and look at the bounce to the upside. So if we had, let's say, for example, placed a short opportunity right off of this resistance area right here, where should we have placed our stop loss? So one thing that you're going to notice is that when you buy or sell off of these structure levels, when I say structure, I'm simply just referring to support and resistance. We want to give the trade enough room to breathe, but hopefully if price is wicking, or you see a shadow right off of that area or zone and off of your trend line resistance, we're hoping that price will respect that zone or that trend line, and it will go in the direction that we want it to go. Thus, we always want to place our stop loss above the resistance when we sell and below the support when we buy. Okay, so that's something that you want to keep in mind. So in this case, if we were shorting, this would be our resistance area. This would be our resistance, okay? We're looking for price to go down, so our take profit target is gonna be below this. So I'm gonna go ahead and clone this, and then we are going to have our take profit somewhere down here. Now, when you trade, you wanna trade from zone to zone, from one reversal zone to the next. So if we're expecting for price to reverse here, look down, look left, and you'll notice that the price last reversed from this area here. So this was resistance. That resistance became support. So if you would have sold here, you would have taken profit right before price reached this resistance area. And look here, if I just make this a little bit bigger, you can see that price came here, and this is where it reversed, okay? So let's see, if you would have risked, let's say if you were swing trading, right? And let's say if you risked maybe about 75, 80 pips or so, maybe, and maybe even less than that. It's totally up to you. I like to use wide stops when I'm swing trading, but let's say you sold here off the trend line and you take it back down to the support, you would have made about 132 pips roughly. So to risk maybe 75 pips to make 132, that's not bad at all. That's right where you want to be, okay? So what you need to remember in this course is that when you are placing your stop loss, you always want to place it above a resistance structure or below a support structure, but giving the trade enough room to breathe. Now, how much room is enough room? That's where you have to look at the strategy that you're using. You have to test it multiple times. You got to document it. You have to see, is the stop loss that I'm using too tight? Am I getting wicked out all the time? And then price is turning around and going on to hit my target? Or is my stop loss way too wide, right? So you have to track what you're doing. So if you do that, that's gonna help you improve the stop loss and where you need to place it. So that should give you an understanding. And hopefully those steps and what I just went over helps you understand where to place your stop loss and logically why you want to put your stop in certain places versus others. So comment below, let me know what questions you have. Hopefully this video resonated with you. I hope that it helps you. And if you are discouraged because you just don't get it, don't worry. You feel like 95% of us when we first started or through those first years when you're just trying to figure things out. You might have an idea and then you're like, I don't get this. It is still too difficult. It'll come. You just have to keep practicing. And once you get this, you'll look back and say, oh my gosh, I came such a long way. This is so easy. How did I not understand this? Remember, you have to train your mind and allow yourself to develop as a trader. So be patient with yourself, stay encouraged, keep working hard, and you'll definitely arrive where you need to be. I hope that you enjoyed this brief course. Again, make sure that you smash the like button for me, turn on the notification bell so that you guys don't miss the next upload. And God bless. I will see you in the next video. Thanks for watching.